How everybody doing? So my name is Isaiah, and just want to share a little bit of information with y'all about crypto. Can y'all see my screen?
Yes, sir.
Okay. All right. So, like I said, we're gonna share a little information about crypto. Just a brief introduction of cryptocurrency. I've been in cryptocurrency for about over 5 years now. Investing long term for the buy and hold. I do a lot of research into cryptocurrency. Do a lot of just different things in cryptocurrency. Man, I really feel like it's the future. And the more that you learn about it, the more that I believe that you'll understand and realize that it's the future as well. In my opinion, based off of the things that I've been exposed to, I believe that we're in the largest wealth transfer in history, right? Like the entire fiat system is moving over to a digital system, and we're in the time frame for that to happen. But most people don't know it because it's not put on mainstream news. So, all right, let's go through some common myths about crypto, right? People have heard different things about crypto. Things like crypto's unregulated, crypto's not real, right? It doesn't have a real value. It's not transparent, and it's a scam. So we're gonna go over a couple of those myths and kind of get it dispelled a little bit. But we're also, I want y'all to also, share your questions at the end, and we'll hash through these things. So why are we talking about crypto? We're talking about crypto because crypto headlines dominate finance and tech news. Businesses and banks are exploring the blockchain for innovations, and governments worldwide are adopting crypto. So over here on the right-hand side, you see that there are headlines, and some of the headlines are talking about JP Morgan, which is a bank. It partners with Coinbase. Now, Coinbase is an exchange. It's a large exchange here in America. Another bank, Citibank, also partnered with Coinbase, right? Another headline talks about Germany pushing for Bitcoin adoption. And the last one down here talks about Donald Trump signing the Genius Act into law. And for those of y'all that don't know what the Genius Act is the law that allows banks to mint stablecoins. So it's the beginning processes of creating crypto into our regular society. So this slide here, so this on the right-hand side, it's about 17 different countries. And what this list is showing is the countries around the world who have laws that regulate cryptocurrency. So cryptocurrency is legal in their country in different ways, right? Obviously, we just talked about Donald Trump signing the Genius Act into law in the United States. You have other countries like, for example, El Salvador, who uses Bitcoin as their official currency or an official currency. One of my favorites is Portugal. Portugal, if you live in Portugal, if you're a resident of Portugal and you hold your cryptocurrency for a year, you pay no capital gains taxes on it. And obviously, it's, like I said, it's about 17 different countries around the world who have crypto regulations. So these other headlines that you see is talking about states that are in the United States that have crypto regulations or laws in their states. We're talking about Colorado. So Colorado allows cryptocurrency for people or residents to pay their state taxes. Colorado has a list of cryptocurrencies that they accept as payment for taxes. The other three are Arizona, Texas, and New Hampshire. Those three have passed into state law their state has a Bitcoin reserve, meaning that their state uses state funds to actually purchase Bitcoin and keep it on their balance sheet for a future investment. So what is cryptocurrency, right? Cryptocurrency is just two words, right? Crypto and currency. And crypto is short for cryptography, right? And the cryptography is just a science of securing communication and data through mathematical techniques. That's a lot to just say it's encryption. A good way to think about it is say that you were passing, like back in school, we used to write notes, right? And you'd pass a note to your friend, right? And in school, you pass a note, teacher might grab it. So say you and your friend got together after school one day and was like, all right, we're going to create our own language. So every time you put an A, put an I. Every time it's a B, put a Z. Every time it's a C, put an F, right? And you have this key. So you write the note, encrypt it, pass it in class. The teacher intercepted. When she intercepted, she look at it, she like, oh, it's just a bunch of garbage. Like, I don't know what this is. And then she just gives it back. So you give it to your friend. When you give it to your friend has the key and they can decipher it, right? Because it's encrypted. That's all that cryptography is. It's just encryption. So crypto is just encrypted. Currency is just money. So think of it as just digitally encrypted money, right? It's a digital form of money built on blockchain technology, and it operates without a central authority. Now that's a major thing, that cryptocurrency is decentralized, right? What that means is there's no centralized authority. Everybody here has a bank account. Bank accounts are centralized, right? Because no matter who you bank with, if you bank with Wells Fargo, Bank of America, USA, Navy Federal, or the hundreds of other different banks that are out here, all those banks report to a Federal Reserve, and there's multiple Federal Reserves around the United States. All those Federal Reserves report to the Federal Reserve in Washington, D.C. And popular to contrary belief, the Federal Reserve is not a part of the federal government. That Federal Reserve is a branch of the world banks. And so that's all those banks, all our bank accounts are tied to a centralized place, which is at one point it'll get to the World Bank. Whereas cryptocurrency is decentralized. So nobody in America, or nobody in China, or nobody in the South Sahara Desert, nobody can centrally say this is what we're going to do with this. The only thing that you can do is countries can put regulations on stipulation in their country, but they can't stop it from being borderless or anybody being a part of it. So like I said, cryptocurrency is built on blockchain technology. And what blockchain technology is, just in a nutshell, everything is recorded on what you call a ledger, right? So think of it as a spreadsheet, right? Everybody has everything that happens on a spreadsheet. So think about it, say that if everybody on this call, right, had a spreadsheet, and then anytime any of us did anything, no matter if it's getting up to go take a shower, no matter if it's going to, buy groceries or get gas, every time anything happens, we all come together and we all say, okay, Isaiah, you bought gas today. And then everybody on the call says, okay, yep, Isaiah bought gas today. And we all write it down on our ledger or on our spreadsheet all at the same time, right? The what happened and the timestamp of what happened. So then that spreadsheet gets filled up. Once the spreadsheet gets filled up, it compiles, everybody has the same thing, and it gets encrypted. Once it gets encrypted, it has what is called a hash value. And that hash value just says that everything on this spreadsheet is the same, and if anything changes, then this hash value will change. So everybody who has the same spreadsheet with all the same information has the same exact hash value on it. So what happens? We take that and we put it up somewhere. Then we start a new spreadsheet, right? Once we get that new spreadsheet, we fill out all of the different things that have happened. Once that spreadsheet is filled up, then it has a hash value on it, and it's chained to the previous spreadsheet. Now what ends up happening is on the second spreadsheet, it takes its hash, and it also takes the hash of the previous spreadsheet in front of it, which when they're chained together, which gives it a chronological order, right? And that's why it's called blockchain, because everything is put on a ledger in a block, right? Which is the spreadsheet, chained together with the hash values of that block that is currently in and the block that's previous above it. And that's blockchain technology. All right, so the main thing about cryptocurrency is it's two different types, right? Well, not different types. It is two different ways to describe it, right? You have a coin and you have a token. Now, the difference between the two is that coins have their own blockchain. They have their own network. They're autonomous to their own network. So you have like Bitcoin, Ethereum, Litecoin, Solana. Those are actual coins because they operate on their own blockchain. Whereas tokens are built on top of existing blockchains. And Ethereum is the most common blockchain that's built. A good example to think about is, like, say you're building a house, right? Houses are built on foundations. So if a company owns a cement company and they build houses, then they lay their own foundation, then they build the house on top of their foundation. That's a coin, essentially. A token is somebody who gets another company to come and lay the foundation, and then they build their house on top of it. So examples of tokens are stablecoins, right? NFTs, which are non-fungible tokens. If you don't know what an NFT is, They're the little pictures that people buy for tens of thousands of dollars. Utility tokens. Utility tokens are just tokens that have an actual use case. One of my favorite utility tokens is VeChain. So, and what VeChain is a supply chain, right? That's all it is. It takes and it tracks whatever it is in the supply chain. Like say if you got a apple, if you buy an apple from a store, it will track the apple being picked from the tree all the way until you buy it from the store. It tracks the whole thing. That's a utility token because it serves a purpose. And then you have meme coins, and meme coins are like the Doges, the Shiba Inus, coin, the Trump coin. Those are all meme coins. So there are over 19,000 different cryptos. There's 19,000 different cryptocurrencies, but we're going to focus on the three that you'll hear most of the time, right? You have Bitcoin. And Bitcoin, even though it is a cryptocurrency, it's pretty much like off to its own. And the reason why it's off to its own is because Bitcoin is the original. It is the granddaddy of all cryptocurrency. So that's a store of value. So that's why it's off on its own. Then you have altcoins, which is just alternative coins. And an altcoin is anything that is not Bitcoin. So you have the Ethereums, the XRPs, the Solanas, the Cardanos, Chainlink. All of those are altcoins. Even the meme coins, they're all altcoins. Stable coins are also considered altcoins, but stable coins are their own separate thing. They're their own category, so to speak. And the reason why stable coins are separate from altcoins, even though stable coins are an altcoin, is because stable coins are pegged with the US dollar, 1-for-1. They don't fluctuate that much. They might fluctuate 2 cents to the right, 2 cents to the left. So they might fluctuate to 98 cents, 99 cents, $1, $1, $2, but they stay pretty stable within that. Now, the reason why stable coins are a big deal is because let's just say that you bought in at Bitcoin and it was $20,000. When Bitcoin runs up to $100,000, which, that's pretty much where it's at now. When it runs up to $100,000, you say, okay, Bitcoin went up to 125 and now it's pulled back to 100. The price is free and I just want to take my profits and get out. How you take your profits is you sell your Bitcoin into stable coins, which is going to leave you at $100,000 because that's where you're at now. And so that's why stable coins are, that's one of the ways that stable coins are used, and that's why they're ideal. So when you have cryptocurrency, how do you store it? You store it in crypto wallets, right? And a crypto wallet is a hardware or software that allows you to store, send, and receive cryptocurrencies. It's important to note that your wallet doesn't actually hold any coins, but what the wallet does is it keeps your private keys, and your private keys are what proves that you own the cryptocurrency on the blockchain. It's really important that you remember, if you invest in cryptocurrency, it's important that you remember, if you don't own your private keys, you don't own your cryptocurrency. That is the most important thing that you need to remember. And I say that because a lot of people purchase cryptocurrency on an exchange and they leave it on an exchange. Exchanges don't provide you with your private keys. And like I said, if you don't own your private keys, you don't own your cryptocurrency. That's like you having your bank account, and every time you want to make a purchase, every time you want to take money out of the ATM, every time you want to do anything with your bank account, you got to call me up so that I can come and put your PIN number in. So, but crypto wallets are set up into two different types of wallets. You have hot wallets and cold wallets. Hot wallets are connected to the internet, and they're usually connected to the internet, and they're usually software or an exchange. Like I was saying, the exchanges are Binance, Coinbase, Kraken, Crypto.com, Bybit. There's tons of exchanges out there. Now there's also software. I like Exodus myself, right? It's a downloadable wallet that you can put on your computer. The reason why I like Exodus is because Exodus provides you with your private keys so that you actually have ownership and custody of your cryptocurrency. Another software wallet is MetaMask. Again, I use MetaMask as well. I use it for trading because you can download it and you put it on your browser as a browser extension, and it allows you to connect your wallet to different websites. So the other type of wallet is a cold wallet. So cold wallets, they're literally stored offline. And there's two different types of wallets. You have the actual devices, which you can see up here. that is like a Trezor or a Ledger. They look like little USB devices that you just plug them into your computer. Now, again, these, just like every other wallet, they just hold your private keys. But the beauty about these little USB devices are they're just a remote. So they provide you with your private keys, and they provide you with this thing called seed phrases. You get your private keys and your seed phrases, put them in a safe place somewhere. So if for any reason your device gets damaged, you lose it or whatever, you can just go buy another one and put your seed phrases in and import your crypto over, because it's just a remote. The same way that if you lose your remote to your TV, you can go to Walmart or Best Buy and buy another remote and program that remote to your TV. You can do the same thing with a hardware wallet, right? With a device, which is like a ledger. Or the last type is a paper wallet. Now, paper wallets are the most secure wallet that you can have, but I'm not a fan of them because it's everything that you have is just printed on a piece of paper. Your private key, your public key, what type of cryptocurrency is, how much the cryptocurrency is, and like as you can see down here, it's just QR codes. Now, I'm not a fan of them because even though they're very secure, after a while, paper ink starts to fade. If you fold it up and you get a crease in your QR code and then your QR code won't scan, you can never access your crypto. So I when it comes to cold wallets, I lean more toward the hardware, right? I have multiple ledgers myself. So this is where the rubber meets the road right here, though. So we're talking about this because we want to know how we can take advantage of cryptocurrency. So one of the ways we can take advantage of cryptocurrency is investing, right? And investing is just buying and holding the digital asset for the long term, right? And you can buy from a variety of different places. You can buy from exchanges, and exchanges sell all the cryptocurrencies, coins and tokens that you can think of. Or most of the 19,000s of them you can find them, right? Exchanges like Coinbase, Binance, Kraken, Crypto.com. Another thing you can do is buy Bitcoin through Bitcoin ATMs. Now, you've probably seen Bitcoin ATMs in gas stations and things like that. You can also buy Bitcoin via Cash App, right? And I was speaking with Doug earlier. He told me that you can buy Bitcoin via Venmo or in other cryptocurrencies via Venmo. So you can also, another way that you can invest in the crypto market, you can buy stocks in companies that support crypto. Like, for example, Coinbase is an exchange, but they're a publicly traded company. So you can buy Coinbase stocks, right? There's another company that you can invest in called MicroStrategy. So what MicroStrategy is, a software company, but they took 90% of their balance sheet and they invested it into Bitcoin. And so their company was $2-3 million, and then they put all their money into Bitcoin. And here recently, their company was valued at 120 billion. So that's another way to get into crypto. And lastly, you could get into Nvidia. A lot of people don't understand that how Nvidia became so big. And the reason why I said Nvidia is because when Nvidia creates graphics cards, and graphics cards is the way Bitcoin miners mine Bitcoin using graphics cards. So when Bitcoin mining became a big deal, everybody wanted Nvidia's graphics cards, and Nvidia's stock price went through. So you can also buy into ETFs and trusts, right? Like ETFs and trusts that are offered through BlackRock, Fidelity, Grayscale, ArcInvex, Franklin Templeton. I personally also have a Grayscale trust, a Grayscale Bitcoin trust, and a Grayscale ETH trust. And all that is they just take your money, fund it with other people's money till you have a pool, and they go and buy that cryptocurrency. And then you receive, the portion, based off of the money that you've invested in. So the other way that you can take advantage of it is trading, right? We're all here because we trade, right? We trade options, we trade cryptocurrency. So you can also trade the price action of cryptocurrency, right? You can mark up the support and the resistance. You can, it's a regular chart. You can mark it up and take your entries, and you can trade the price action. This right here is what I use. It's called Gains Trade. You connect your MetaMask wallet to it, fund your MetaMask with cryptocurrency, and you can trade and, trade the price action. So that's the end of my presentation. Anybody have any questions?
I like it. I like it. I like it. I like it. That was beautiful. Thank you. A lot of that was foreign to me, like I was saying earlier, super foreign. I didn't know they had all of that many cryptocurrencies. For number one, I didn't know about the hot wallet and cold wallet, the exchanges. Definitely, I thought you buy my crypto, my Bitcoin on Cash App or Venmo, and mine. Didn't know. I didn't think the key. The key is what make the owner, right? Those are beautiful. Those are beautiful. I'm gonna let if anybody else have anything, I'm gonna let them go first. But I definitely got a few things that came to mind.
Of course. Yes, Kat.
I just wanted to say that you did a really good job of explaining everything because I had questions about the cold wallet that you kind of made really clear. So I wanted to say thank you for that.
Not a problem. You're welcome. I'm glad it was clear for you. Anybody else? Any other questions? What's the best place to buy crypto? It's a few different ways to buy it, right? So I'm glad you asked that. That's another class that we're probably going to go into. I want to really go through give another presentation on buying crypto because it's a few different steps that I really want people to be aware of as far as security before they start purchasing crypto, right? Because just buying crypto, one of the main things, right? I suggest everybody create a ProtonMail before you do crypto. And the reason why I say ProtonMail is built on blockchain technology. Even the people who own and run ProtonMail can't see your emails, right? So it's finances, right? And you're talking about we're taking over our ownership of our own finances. So with that, we have to think security in mind, right? We can't think about if we buy crypto and we say we'll go to Coinbase. You go to Coinbase and then your Coinbase is connected to your Gmail. Your Gmail gets hacked. Now your cryptocurrency or your bank account that's linked to your Coinbase is now accessible to whoever hacked your Gmail, right? So that's why we want to think security up front before we start, doing these things. Because again, when it comes to cryptocurrency, where it's decentralized, so we can self-custody. And if we can self-custody, then that means we don't have a FDIC to insure our money up to $250,000, right? We got to take onus on this for ourselves. And this is for our future, for the future. So right now, and so like I said, I want to put together another presentation to give everybody the actual step-by-step breakdown of how to do that. Another class would be great. So yeah, I'm here. I'm here. Whatever I can help with, I'm here for it. If you don't have questions now, just reach out to me in the Discord. I'm in the Discord. Like when me and Doug first got on, I'm on the crypto side. I've been dropping all my trades, my gains, my lessons that I've been making. So I'm here. Whatever I can do to help, I'm here to help.
Now on that trading side, because I like the aspect of the trading side of crypto, right? Because I want to be able to trade crypto and be able to get money out of the crypto market to pay for my crypto for my long term. I see you getting 175% overnight type deal. And that trading is 24/7, 365. Days, weekends,
no breaks, all day, every day, any day. And you just brought up a really good point. So I want everybody to just think about it, right? We can I'll get to there's no best time. It's just whenever you see a setup, that's where you should probably take it, right? Because the crypto market just moves. But back to what you said, Doug, so a really good thing is that we all trade now, right? So we all trade. We can take the trades or some of the profit that we have used with the options and transfer that into crypto and then trade cryptocurrency, right? And trade the price action of cryptocurrency. Then we can use that cryptocurrency trading to then buy crypto coins to invest for the long term, right? So it doesn't require any additional funds that we have to put in. Now we can put in additional funds if you want to, but you can also, let the money that you already invested continue to work for you, right? So we have those options.
Yeah, that's beautiful. I'm definitely looking to take advantage of that and have the community be able to wing off on that side too, because I want us to be able to have the full spectrum of trading. If you ain't available 9:30 to 4 on Monday, and you got some time from 10 p.m. to gosh darn 2 p.m., the same tools and structure and setup works over there. I sat and analyzed for a couple weeks just to make sure our tools work over there as well. And them things work somewhat a little better, to be honest. And that's what I want our community to have, the opportunity to be able to explore avenues, even if we can't do it from 9:30 to 4 p.m. on Monday through Friday, right? And I love that. Another thing I love about the crypto trading is it's a few differences, and we have another class too. Anyone who's interested in trading crypto too, to get the specifics in it. But I noticed, like in options, those contracts be set prices. In crypto, it's whatever you want to wager. So if you got $10, $5, you just go ahead and wager your $5, your $10, and you get your gain off of your money that you wager. I don't give a dang if you got $5, you could get 100%, and then you got your $10.
Yep. And that's the thing. So with the platform that I use, G-Trades, right? G-Trades, the minimum you can risk is $5. So like you said, you can do $5 trades, right? You can do $10 trades. And you can just keep going up in increments, right? And the beauty about it, right? The like you said, the options, the price contracts are set, right? You can set your stop loss. You can set your stop loss, and your stop loss, obviously what the stop loss is, you can set your stop loss wherever for the price action, and you can set your take profit for the price action. Like for example, last night I was in, or not last night, all day yesterday, I was in a Bitcoin trade, right? Even though I had my stop loss and my take profit set, because based off of, understanding the market structure and everything, I knew Bitcoin was dropping. So what I was doing was I was just adjusting my take profit down, adjusting my stop loss down, and just kept letting the market run, right? And that's how I came up with 500% trade, right? So you can do that and just let it run, right? So we literally have the options to do as much or as little as we want to, man.
That's crazy. We can't lose, but just like option, we can only lose what we wager.
So like for example on G-Trades, right? On G-Trades, you can, like, say if you do a $5 trade. If you do $5 trade, you can set your stop loss to say, I only want to risk 25% of this $5. I only want to risk 50% of this $5. And then that's where your stop loss will be, right? So
that's crazy. And there's no freaking account balance that you could trade. So like if I had $100 stock options account or brokerage account, I can only operate $100 in that day. So if I buy a $60 options contract, I only have $40 left to play with. So so you can buy $5 contract and you keep buying $5
just until you don't have no more money left into your account. And you know what I mean? You can do that as many times as you know what I mean, until you have it or you don't have it, right? I suggest you only risk, and trade at 1 to 3% of your account per trade, right? And that's 1 to 3% on one trade, or 1 to 3% on a few different trades. You know what I mean? Like, that's what I suggest. That you do.
Good risk to reward. Got you. I love it. Come on, somebody got to have some questions.
Yeah. What's up, Cuzzo?
What's up, Troy?
See you again, man.
Yeah.
Quick question. You was talking about the different coins, the way Bitcoin, the tokens, and the memes. Difference in the process of the three. How do they even relate to each other? Like coincide with each other. Like you have your meme coins people love, you got your token coins people loves, and then you got your Bitcoin? Like, what's the purpose of one to the other? I was trying to say, I guess.
So like, for example, like Bitcoin, right? Bitcoin, big entities look at that as like a store of value. They call it like digital gold, right? They just put the money over there and they just park it over there, and it's going to be like a long-term asset that's going to continue to rise, which is why, you know, countries and states and all of these people, they invest in it for long-term gains, right? Because they know that it's just going to continue to rise in value because it is a finite supply. There's only going to be 21 million Bitcoin ever minted. So, you know, at some point, right, just for the whole world, there's only going to be 21 million. So at some point that 21 million is going to hit, and just like supply and demand, the less of it that is around, the more it's going to be worth, right? So that's why Bitcoin is considered like digital gold, where you have like the utility tokens. They have an actual use case, right? They're going to solve a real world problem. Like, for example, XRP. XRP's use case is cross-border payment solutions, right? It's like money changing, right? Right now, we use the SWIFT system, right? The SWIFT system, it takes an hour, a couple of hours to exchange money or whatever. Whereas XRP is going to be able to do it in minutes and trying to get down to seconds, right? So they're actually solving real world problems. Whereas meme coins are just, it's just all hype. Like, it's just all hype. That's all it is. There's no real rhyme or reason to them. It's just hype and, you know, people riding the wave. So I personally don't mess with meme coins at all. I'm not gonna say that there are people not make money off them, because they do. I just don't make money. I just don't mess with them because I don't see a longevity in it. And then you'd only be riding the hype wave, right? And just like in options, right? In buying an option contract, you buy the contract, but you can only get out when you have somebody to buy it from you. Same concept with memes. Memes is only hype. So you get in hoping that it'll go up and you can get out if somebody buying it for you, where somebody's buying it at the top and it's going to drop off because people are pulling their money out. So
okay, makes sense.
Anybody else? Question. Well, I mean, if ain't nobody got anything else, but that's all I got. And I hope we'll get back together. You know, Doug, me and you will figure it out when, and, you know, come up with a class for investing in cryptocurrency for those who's that. Oh yeah. The next one. Me and Doug will get together and figure out when we'll do the next one. But it'll be how to set us up to start investing in cryptocurrency. And then in that class, what I want to do is I want to start helping people understand the tools so that you're not just going to take it from me on what I feel like a good coin is, so you can understand how to evaluate on your own what a good cryptocurrency is, what you should look for, and how you can figure out what this currency or token is actually doing. If it has a use case, and if it has a use case and it aligns with you, then how you can get invested into it. So I want to we'll get into all of those type of things on the next class. And then, you know, if y'all are interested in trading, we'll, you know, go into that as well.
Definite. And I want to make sure everybody have access to the crypto category and the channels that's inside of there. I just want to make sure everybody have access to that, because Isaiah has been flooding it over there with news, with education, right? How to just clickable actions where you could create the ProtonMail, step-by-step processes to get yourself set up. So I just want to make sure everybody have access to that within the Discord. Okay, so I guess that's a yeah. All right, yeah, and we're gonna do another meeting. We could do these however often you guys want it, man. Because it's definitely a good opportunity for us to take advantage of. For sure. It's an absolutely great opportunity. And like Isaiah said, this structure is being set up right now. So it's like back in the industrial era, right? That structure was being set up with production, manufacturing, right? It was a whole industry, a new industry, right? That was being created, right? Building workers, right? The assembly line, right? And this is that type of deal. So we want to be in it while it's on the ground level, right? So we can you know, have benefits and have some of that wealth that's gonna come out of this, right? So I salute you.
Look, I just want to leave everybody with this one nugget. You might not, you know, you might still be on the fence about cryptocurrency or whatever, but cryptocurrency is going to be the future. And like Doug just said, they're building the plumbing out for this right now, right? They're literally in the progress, right? The government shutdown is still going on, right? But their Congress is literally, they were supposed to have it out in October, called the Clarity Act. And what the Clarity Act is, the regulation for cryptocurrency. And once they get regulation, then that gives companies the go ahead and start dumping money or purchasing money in the crypto and moving things on chain. And I say on chain, meaning onto the blockchain. I don't know if y'all know who BlackRock is, but BlackRock is the largest hedge fund manager worldwide, right? I think they got, like, correct me if I'm wrong,
biggest.
Like,
no, they're the biggest.
They got like $17 trillion under
management. For
right?
sure.
The CEO of BlackRock has already said that he wants every asset tokenized, meaning that it's going to be moved onto the blockchain. If it's moved onto the blockchain, what that means is that it's going to be publicly available worldwide 24/7, 365. And for if for nothing else, you can trade that. You can trade that, right? That gives somebody in South Africa whose bank is not allowed to get on the US stock market, that allows them access to it. That allows the person in South America in the rainforest who only has internet on their phone, that gives them access to it. There's money coming into this market that is literally going to be life-changing, right? You're talking about trillions of dollars that is coming into this market, and we have the opportunity to be a part of it. So it's not a say to get in and not get in, but it's just a thing for me is just providing information, and with the proper information, you can make a proper decision. So,
yes, sir.